Hi guys, thanks for coming to the meeting. We have a few more joining as we go here. Simon Kelly is my name, and just as a brief introduction here, the meeting is being recorded, and it'll be published up on the web later on. So anything you miss here, you can come back and pick up later on. I'm just going to clean out Spotlight for me. No, pin for me. Okay, great. So what we're doing here, guys, is this is our final webinar for Quinns in Drumcondra. What I intend to focus on today, some of you may have attended the webinar about 4 or 5 weeks ago, where we focused on the building itself. Jay took us on a kind of a whirlwind tour of the property and all the progress we're making. I'm going to update you guys a little bit on that today, but I'm also going to focus here more on the business, the profitability of the business, what the kind of bigger pub market is like, and how this works as a kind of a financial investment. Because ultimately, we're involved in the business to provide, great food and drink for people, but also, we're in it to make a surplus here and make some money and get this property back to its prime and trading again like we know it can in the past. So what I propose to start here is a quick refresher for everyone, about where Quinns is. I think everyone knows that, so I don't plan to spend too long on it. But a key point that we just keep driving home here and that we're acutely aware of is our proximity to Croke Park and this very busy area with, tens of thousands of chimney pots, which we feel are heavily underserved from this kind of food and beverage opportunity. So when we look at a business opportunity like this as publicans or food people or generally property developers or investors, we're looking to, what's the demand in the area? And we know Croke Park brings, unprecedented amounts of traffic up this, couple of 100 meters of walk up here to Quinns and then out into the wider city. But, we're not building the whole property to trade on Croke Park. That's like the cream on the cake that gives us an extra $1 million a year revenue. And I'll show you how we kind of model that up in our model. But the driver here is everyday business from around us. To remind you all, Quinns is sitting here in the middle of the screen, and it's everyday business from the wider Dublin area, DCU, people living and working in the city, people traveling in to socialize, and this part of town in general we see has gone through transformations over the last 10 years. Phibsborough with the redevelopment of Dalymount Park. This is an affordable part of Dublin for people to live in, young people who want to spend money socializing and going out and having a good time. And I'm suddenly realizing I don't think I'm sharing my screen, so I'm going to go back and do that again. Apologies for that, guys. Screen my screen. So I'll quickly whistle stop in there again into Earth. It's just loading here for me. Fresh page. So here we go. So by way of a very quick recap to all of that, I won't repeat it all. Key drivers for us are proximity to Dublin city centre, proximity to all the red brick houses in the area, the universities, and proximity here to Croke Park. For a brief recap for people who haven't maybe been to Quinns, when it was open a few years ago, or maybe 10 or 15 years ago in its heyday, the footfall from Croke Park here very naturally walks up this road here and ends up bypassing Quinns here at huge volumes. And as kind of food and beverage and hospitality operators, we know this kind of passing trade is phenomenal. And the whole area around Croke Park is quite undeveloped and quite underserved. It's in the north of the city here, where there's not a kind of a requisite amount of food and beverage locations if we compare it to Aviva on the south side. And we know there's a very profitable business to be developed in terms of patrons, users of Croke Park, corporate custom. And the key thing that we've identified in Quinns here is that we have the raw size in our property portfolio in the areas where we can serve food and drink, to provide a unique offering to people like this. For the people who've never been to the property, the original Quinns is roughly this white property here. That by itself is a very large pub, which has had huge success for those years. But when we add in the adjoining food yard here beside it, which wraps around this nice white house here and extends all the way to the back lane, we have a unique offering in the city, both indoors and outdoors. And that's been one of the key developments of the food and beverage business, has been eating in and drinking in and eating outside and drinking outside and kind of flowing between them quite naturally. And one of the big construction jobs we did, I'll quickly flick to one of the images of that. A key piece of the construction that we have carried out here. This is an earlier photograph, but essentially what was an overgrown green garden there now has been developed into a beautiful food yard. And this image here kind of captures how large it is. And when this is finished, when we open, we're targeting kind of March, St. Patrick's Day. This will be kind of a seated, thriving area, kind of bustling, feel of a market, feel of an outdoor area, feel of a garden, kind of combination of things with lots of ways into the pub. We've a new entrance here at the bottom. We've a new roof terrace up here, and here on this image here at the rear of the site, the fire exits from the old nightclub at the back of the Quinns naturally open into this area as well, as does the back of what we call Ray's Bar here. So we've kind of multiple points of entry into this pretty unique outdoor space that's currently our staging post for the construction. But once the construction guys have moved out of the way, it's the final piece in the puzzle that'll start taking shape in January and February and March of this year. So construction's going really well. Things I'd highlight, which we think have been of huge importance, is the big heavy infrastructure work we've done on this property. We expect very large volumes of food and drink to be served here. And we've 350 lines from Guinness in the whole property, which will be the most we think of any pub in the city. So we're expecting a lot of kind of surge volume around events. And similarly, we've put a lot of effort in over the summer here, getting all the underground services and sewage work completed to kind of complement that. Old buildings like Quinns can have problems in the sewage, and we've spent at least 3 to 4 months streamlining all of that into modern standards, which just means we'll have no issues around bathrooms working. We'll have plenty of bathroom capacity. And for anyone who's been to these kind of events, it's grand going to buy a drink and standing outside in the sunshine, but you do want to have a pleasant experience for the whole evening. Bathrooms, safe areas like that, and high hygiene. So we've ensured that kind of stuff is done. That's the hidden stuff that's under the bonnet, and that's what really makes a premises like this operate very efficiently. And as I sort of begin to switch over to the financials of the business, we know the key to making profits in Quinns is having it operate very efficiently, having it operate very profitably, and therefore becoming very valuable. So before I jump into specific financials for Quinns, I think it was worth flicking to the Irish Times yesterday, and there was a very useful article which I didn't know was coming out the day before this webinar. But it highlights success this year in the pub trade in Dublin, how the values of pubs in general have been rising since COVID. And I think this is probably very important to rest on for a minute. The pub trade and the hospitality trade really got quite challenged during COVID. Many places went out of business. It was an unbelievably challenging time. And luckily, I guess we weren't trading through that time. We were in the planning process trying to get a planning permission for apartments, which we're glad we didn't if people review the first podcast here. But Devitt's Pub here is a prime example of a key thing that's happened in the pub trade that we intend to ultimately capitalize on Quinns in the future. And that's marquee properties like this. You can see Devitt's here is a small property. It doesn't look, you could walk by it every day, but this pub has last sold year for 15 million euros, or sold last year for 15 million euros. And the buyer of this pub is a new buyer in the market that's only been in the Dublin market for the last 4 or 5 years. And as a kind of promoter here, an investor in Quinns, I'm acutely aware of not just the service we're providing our customers, but also the asset we're building that we can ultimately sell, or that you guys, if you're EI investors joining us, you can ultimately profit from the same kind of asset value. So McDevitt's here is a very successful, very well-run operation on Camden Street. We understand it's turning over between 100 and 125,000 euros per week, probably making profits of 30,000 a week, which is over €1.5 million a year. And that has been purchased by a Testra Capital for roughly 15 million euros, which we think is a great number. We'd be really delighted if ultimately our ambition in Quinns is to build a premises worth between 10 and 15 million euros by rebuilding his historic trade over time and getting these kind of values. And we think it's got more potential beyond that, but we're kind of capping ourselves there at the moment. Other highlights I take from the article yesterday is that the entire pub market had an exchange value of about 53 million euros. And what we take out of it is that the average pub is 3.6 million euros, but there's really a new category has been formed, which is call it 4 and 5 to 15 million euro category, where highly sought after brand name pubs are trading at these higher prices. This would include the pub in Clastool here at 4 million euros. It would also include McSorley's in Ranelagh, which traded hands at 5.5 million euros. And we would call these classic residential pubs doing a very good job for many, many years, serving loyal customers and being reliably and repeatedly profitable. And that's what Quinns was before it went into decline. It went into decline probably when it was in receivership after Sean Quinn was forced out of Anglo and Quinn Insurance in the North. And by rebuilding Quinns Pub back into that category, and then adding all the extra horsepower we have next door outside, we really think we've got the opportunity to generate a unique hospitality venue in Dublin with an equally unique value on a capital value on it as well, which underpins this whole investment strategy. To take the lower argument, the pubs that have not been working very well, some of them were in the McKillen Group, the Lucky Duck and Angel Street. These pubs are trading at the 2 to 3 million euro range, and we'd kind of fundamentally call them nice premises, but with no real backbone of trade in them and no real prospect of profitable trade in the future. So therefore, they're not trading at these higher value points, and that sort of naturally jumps into the business model that we're putting in place for Quinns and how we think it's very profitable, first of all, and therefore value generating a huge capital value for us as owners and for you guys as investors. So the key things I want to focus on here is how we ensure our profitability in the pub. It's one thing turning over money and getting high turnovers is great, but we know we have to drive through profitability at the bottom, at the EBITDA level here, because this is where we get valued by the likes of a Tesla Capital or any future purchaser of this asset in the future. And this is also the cash flow that lets the business build up reserves to buy back the EiiS shares in the future. And the cornerstones of Quinns is that we are, I'm going to zoom in here a little bit for you. Just give me a moment. Cornerstones of the trade is that we have a lot of activity in the place, coming from different kind of events, and we have a solid backbone of local trade at the same time. And we have the ability to do this in Quinns because we have 7 or 8 food and beverage locations, plus we have all the food trucks in the yard. And this creates so many different ways for people to come up there as customers, so many different reasons to come up at different times of the day. And that's what drives the whole business. And we see ourselves operating, long hours through the day, not focusing on Thursday, Friday, Saturday, historically, or Sunday lunch and things like that. This is a place that's going to be trading sort of deeply and sort of in a large variety of ways through the whole week. And therefore it's very robust and very reliable. And we build it up in simple terms. We see a classic bar, the main bar. We'd call that the old-fashioned pub, where you might go for a pint of Guinness, with your friends, generating 20,000 euros per week. We then have the club bar at the back of the property. This is where we're using the scale of Quinns, the old nightclub at the back, driving late night events, driving music events, driving live music, disco music, pure dance music. That sector of Dublin has been underserved and been in decline for a number of years because the city centre has got quite challenging in terms of security, in terms of violence at night sometimes. I think we're all aware of that. And these regional or these suburban locations here, we think have a huge opportunity to kind of pick up that if you're from the north side of Dublin here, if you're in university in DCU, or if you're from Drumcondra or Phibsborough or these high population areas, you can come to Quinns on a Friday night and stay out till 2 or 3 in the morning. You don't have to go downtown with all the challenges it brings in terms of taxis and antisocial behaviour. What's very important there, and this comes with Jay's experience of having run a range of nightclubs over many, many years, is that a business receives door money when it's operating like that, and this door money is very high margin. So whilst the bar might be generating 30,000 euros per week, by generating 10,000 euros on the door, we're essentially at 90-95% margin on that kind of revenue, and that drives into our bottom line and makes the business very profitable. As we move away from the classic weekends, late nights, club stuff, you can see here we've aligned, and this financial model has been sent to a couple of investors. I'm happy to send it to anybody after the call if they email me directly. It's the backbone of our IM and our prospectus, but we haven't included it in detail for everybody just because it's quite a complicated financial model. The garden fee income is essentially rental income from our food trucks. We think this is really important because really good food is a key piece of any kind of entertainment, hospitality at the moment and going forwards. But we know manning kitchens, paying staff, seeking chefs is really challenging and expensive, and is a recipe to lose money. So our food model here is very much we'll operate one kitchen ourselves, doing boxty, as Jay's mentioned on the previous video, which is kind of classic Irish pizza, which is very simple to produce, very popular, and very high margin. And then our food trucks and our stalls here will be providing any variety of food for every kind of interesting food taste in Dublin. It'll be Indian, it'll be Asian, it'll be vegetarian, it'll be high protein, it'll be coffee. And these will be young food entrepreneurs who are very happy to, to get stuck in and build their business. And we're enabling them to build this great business like this. And we are certain that'll bring a variety of food into the offering here that our customers are going to love, and then they will obviously come to the premises again and again as repeat customers. And whenever they're buying alcohol or drinks to go with this food, they're in our main bar or in our club bar buying the drinks. So it's very complementary. And then what we call here residential income is very simply on the upper floors of the property we have residential space. We think we're going to operate that possibly as short-term lets in a hotel environment or possibly for staff accommodation. But either way we go, it's a great bit of free income for the business. And there's almost no cost associated with it. And that's, again, a backbone of income that drives, those people stay, they socialize, they publicize the place, and everything's feeding off each other. And that's a kind of a normal week in Quinns. And then when we hit the special weeks, this is where, we get kind of excited because we get these huge days. From a context point of view here, many years ago, I was involved in Searson's on Baggot Street. And Searson's was a similarly high brand value rugby pub. And on the match days for Lansdowne Road or the Aviva, it would do 80, 90, 100,000 euros per day. And those days were huge, and that's exactly what we have forecast here for Quinns on match days in Croke Park. We've done a lot of research here with Diageo and with previous managers of Quinns from the mid-teens when it was operating like this, and they've all validated these kind of figures, or they've even given us bigger numbers, to be honest, on match days. So we've conservatively put in a 95,000 euro drinks revenue number for a match day, but informally chatting, we think there'll be days when, if the sunshine is out and if the right people get to the final, there's days where that could nearly be doubled. And that's a really unique business because by turning over that much revenue on a day, with associated food revenue, they're very profitable days. And on our business model here, we're forecasting, I think it's 16 days per year, like that, between finals, semi-finals, and concerts. And this is kind of an underlying backbone to the business that sort of supplements all our normal weeks and gives us huge profitable weeks. And it also makes Quinns as a business very valuable if we sell it in the future for any other publican looking to buy it or any investors looking to buy it. Or plus, you're buying something that's unique, that's reliably profitable. And Croke Park is not going anywhere. If anything, there's going to be more and more events, whether they're rugby events or more concerts in Croke Park. It seems to have become more acceptable to kind of use it more. And we just know it's a great place to be beside. For anyone here on the call in the pub trade, these will be familiar figures, but these are really important. Gross margin on beer is vital. This is kind of, we don't intend to be overpricing our beer, but we're going to be making a gross margin of 70%. That's a mixture of Guinness giving us rebates. It's a mixture of the other brands supporting us. Down Temple Bar, they're probably trading at 80%, but we all know it's too expensive. And giving good value to customers, but making a reasonable gross margin is very important to us. And then the other very important figure here is main bar payroll. To be profitable in a pub, we have to be operating payroll in the low 20s. If you've ever gone to a place which is full of staff and not full of customers, as professionals, we know it's losing money, and it's simply the only figure you need to look at on a bar is the payroll percentage to understand the entire P&L. Same for a restaurant. We keep this low because we're not producing all the food, we're not stocking all the kitchens. It's one of the reasons we can operate here at 24% and not in the mid-30s, which a lot of restaurants will be in, which is why we're seeing them all closing around the city at the moment. And really the key to by getting this revenue side of the business working, this is what drives our P&L. And by driving our P&L, it's what drives the value of the business. And this is what drives our ability to raise money from yourselves, our ability to kind of pay the coupons on the money. I've had lots of queries over the past few weeks about the dividend, the coupon, things like that. And if I focus here, we're looking to build a business with a turnover ranging between 4 and 5 million a year. Okay, we know we got to build it over a few years. We know it won't just turn on in March and like it'll be happy days. And this is where Jay is very important. Jay's operated 18, 19, 20 premises over his years, and he's very used to opening a premises, getting the initial hype, continuing the hype into a successful trade, high quality food, happy staff, high quality customers, and it's a very virtuous cycle. And it's sort of simple comment to me. He's recently taken over operations of a well-known bar in the city, which was being run by an investor. and it was challenged. It's a marquee premises that we all presume would do well, but it was losing money right off Georgia Street, and he successfully turned it around by increasing revenue by 25 and 30%. But the key things he would say is that he's fixed the culture in the business. The staff are happy. The staff are therefore happy serving customers. Simple things like maintaining the property, having the kitchens working efficiently, having no kind of unmaintained areas. And as he says, when they're running very well, they get quite dull because it's quite simple. You're only in crisis management when a business is being run badly. And when we get open and running and streamlined, we won't have any crises in Quinns, and we'll just have this continuing building of weekly revenue. We'll have to weed and carefully select our food operators in the food yard, and that's simply measured by their success. And if they don't make it, we'll try and support them, but our business is bringing in the most customers possible. And we know by having a very attractive mix of food in that garden, that's what's going to drive a lot of customers into the main pub, who will then come back on Saturday and Sunday and hopefully socialize late and come early in the morning on the Sunday and have breakfast and fill out the whole trading period. Those kind of revenues develop taken through our gross margins, we become very profitable at a gross margin level. And then, as you can see here, by controlling our wages, our overheads are very much fixed in the business. We generate a figure here. I'm just going to update that title because it's slightly out of date here. That's essentially our EBITDA figure. Where we generate a business making between 800 and 1.3 million per year. Okay. And that's the cornerstone of the capital value of the property. And we know by generating this kind of property, this kind of profit stream, we'll be developing a business worth 10 million plus, back to the kind of mantra we're trying to deliver for everybody here. So I say this financial model goes into a lot of detail. It goes into the weekly periods, the build up and the cash flows. We're happy to share it with everybody. It's quite internal, so we only share it on a selective basis. But if anyone's really curious about how a business like this gets profitable and how it maintains its kind of cash balances through the period, it's all here, and we're very happy to share it. And as a policy kind of going forward on the business, we intend to be very transparent with all investors. We know this is about building up trust amongst ourselves as a group going into the transaction, and also over the 4 years, and maybe some investors will stay beyond the 4 years, as we've suggested to people, and continue to receive dividends going forward. But our intention in doing this as a kind of an offering here with a wide number of investors is to gather 100 people to support the business. We'll end up with 60 or 70, we think, because some investors have invested more than the 10,000 we suggested. And that's a very strong group of people who will profit from the business, get some joy and success out of it, and then also either stay with it or come and do it again, or ask us to expand. And if we see an opportunity in the future, we might all choose to go and do that together. I think it's worth flicking over to the prospectus briefly to kind of recap for anyone new here how the investment works, how the EiiS works, and if they choose to stay on after the EiiS, what they would be likely to receive. So from a simple point of view, if you're subscribing to shares now, or if you've already subscribed, thank you very much. And we're raising up to €1 million. Our minimum raise was 500,000, which we've now exceeded. Lots of queries online have been around that, and we've been delighted with the response. It was quite heartening, if I'm really honest, from the very first day. The media coverage was useful, but there's a huge sense of goodwill for the property here. And we know that goodwill is also going to come into the trade. So in simple terms, you're buying B shares in Desculpio Developments Limited, which is the owner of Quinns and the adjoining properties. And as a shareholder, you're going to receive an annual dividend of 12.5% per annum. And that dividend will be paid every December. And we see it as being quite a simple transaction. Every December, we make the dividend to yourselves, and there'll be 4 periods where that's received, which is the 4-year tax life of the EiiS investment. So if you invest €10,000 into Quinns, you will receive back €5,000 of dividends over 4 years at a rate of 1,250 per annum, which we think is an excellent return. We also think it's a fair reflection of the risk and the trust you're giving by getting involved in the business. From an EiiS point of view, and I think most of you probably are aware of that, by making a €10,000 investment, Quinns, as a new business, because we're reopening the food yard here, is qualifying at 50%. We've ASITs giving us a formal opinion on that at the moment. And that means that a PAYE or self-employed tax investor will receive €5,000 back from the Irish government, either immediately if you're self-employed in the form of non-payment of your preliminary tax, or as a rebate, which we understand will take about 14 days from the the final paperwork we send you in the middle of January. So by February, you would have received €5,000 back of your investment, which we're delighted. The government's put this scheme in place to incentivize people to invest in small businesses like Quinns and technology companies and other investments here, wind farms and whiskey distilleries, as we all see. And I guess competing in that landscape, we really believe Quinns is kind of a unique opportunity because it's a pub. It's a pub in Dublin. It's a unique pub with history and brand value. It's uniquely large and it's going to be operated very well by ourselves. And also it's kind of almost ready to go from a construction point of view, and we'll be trading immediately early in the tax life. It's worth highlighting here because a few people have asked me about the ownership of the property. So Sculpio Developments Limited owns Quinns Pub, and that's the company that you'll be buying shares in. And we have arranged, the original purchase of all these properties was carried out about 4 years ago by City Quarter Capital, and there's a €4.5 million bond on the properties. So we're trying to build a business worth about 10 to 15 million. If we go back to the original maths I spoke at the beginning, and after 5 years of trading, we will be redeeming out City Quarter Capital either with a bank loan of €4.5 million or with cash built up in the business. So we think it's geared, but it's geared at a very sensible level, and we've no coupon or interest payments to make against this loan note for the period of the EiiS. So the only money leaving to Sculpio Developments during the period of the tax is the dividends to you as shareholders. There's no payments going up to the bond note holder here. And the reason they've done that is they're recognizing that we've all come together. We've invested a lot of money in refurbishing Quinns and bringing it back to its glory. That's ensuring they get their 4.5 million back. And therefore, they're giving us the period of time to build the business to enable that to happen. Okay, you'll see here I mentioned greater than 8 million. And I suppose the Devitt's transaction has really highlighted to me how we can look to exceed that by building. If we build a business along the lines of the business model we have developed here, we'll be exceeding that capital value going forwards, which has me very excited because as a promoter of the business with Jay, we really begin to make our profits after we've redeemed you guys as EiiS shareholders and after we've redeemed City Quarter Capital here from the bond. We can then in 5 or 10 years time, confidently be the owners of Quinns and own it for 10 or 15 years going forward. Jay has sort of said to me he'd quite like to be a publican again, driving a big squishy Mercedes car at some point in the future, and enjoying kind of success in the pub trade again in the later years of his career. But the query we've received is around EiiS, and just to highlight that here, it's tax relief. It's 50% on companies like this, and Quinns or the Sculpio Developments Limited, we're certain that we receive relief of the 50%. There is a new maximum investment level of 500,000. We don't expect any investors to invest anything like 500,000 in the business, and in reality, we would actually discourage it because we're looking to get a wide range of diverse investors between 10 and 30,000, which is what we've achieved to date. We've accepted a couple of people at slightly smaller lot sizes just because they've been so keen to get involved. And the 10,000 wasn't designed to be kind of a rich people only level. And there is some real people, some genuine fans of Quinns have come forward saying, would you let us invest 5,000 or 7,500? And we've said, of course we can. The 10,000 level was kind of arbitrary, and we're happy to be flexible on that. And if I turn back on my monitor, I'll stop sharing. There we go, guys. Get me back. I see a few names here. Good to see you all back. So that's really, I suppose, what I'm trying to leave you with today here is the recording here will be shared afterwards, but it was really kind of a whistle-stop tour deeper on the financials in the business around how we make money, how we make it profitable, and how we make the investment secure for yourselves as investors. So I hope that's helped. I hope the figures on screen have been kind of clear. From a feedback point of view, you're all welcome to send emails directly. We've no problem receiving any kind of email queries. We've been, we meant to keep a better list of frequently asked questions, and I must refresh it, and apologies if I haven't, because I've been dealing with everybody on a one-to-one basis. But again, we're delighted with the response. We're delighted with every investor who's come forward. We sort of feel a huge sense of kind of joint optimism for the future, together with, a real obligation to yourselves to make this work and deliver it. We've a super obligation to ourselves, Jay and myself as well, to make it work. But we're looking forward to kind of this being a great business for the next 5 and 10 years. You guys enabling the journey. And as we've said there briefly on the call, we're structuring the EIiS as a 4-year investment because most people want to get the money back and do something else with it. But as we hit the 4-year window, and as if you and as investors feel like staying involved in the business, we are completely open to that because our ambition here is not to own and exclude you guys, it's to kind of own and include. And if at the end of this period, there's 20 of us together and, 60 people have been redeemed or 70 people have been redeemed and there's 20 want to stay with us, we know we'll find more opportunities in the future. And Dublin's going to be a great market in general for hospitality. We've visions over the next period of building more at Quinns, building more buildings, probably on the food yard. Ultimately, this is going to change a couple of times, but we know by getting this, the next version right, we can make a lot of profits. And then as we come across good ideas, whether it's more hotel bedrooms or more covered drinking areas or a restaurant or anything like that, or some terraces on the first floor, we've kind of endless ambition to make it unique. And again, the opportunities we see is because we have the benefit of the luxury of all the space in it, we can continue to make it unique. And that's what's going to make it interesting for customers. And it kind of ultimately, when the customer is happy, then we'll have a brilliant business. So I'm going to cut it off there, guys. I want to thank you all for coming. I'll publish this up on the web later on, so you can view it back if you haven't managed to catch the whole thing here. I hope I've covered all your queries. And if not, I'm sure I'll be dealing with some of you guys on email shortly over today, tomorrow, and the next few days. In principle here, we're closing out the last few slots at the moment. We probably have up to 10 slots available, depending on the size. And we're hoping to get kind of confirms off people, up to next Tuesday and sort of conclude all our business by next Friday and sort of all go home for Christmas, pay the builders, and we all come back in January and finish the job. Thank you very much. I appreciate you joining. Bye-bye.